Thanks for joining us today. I'm Marlin Bohling with you, and we are keeping close tabs on what's going on in your ag commodity trade. I happen to be joined in studio this time around by our regular contributor each Monday at this time, the one and only Chris. How you doing?
I'm doing fine. Marlin, how are you?
All right.
Good.
Thanks for joining us here. Chris is just down the street here, and he walks over and gets a little exercise here. And Chris Swift is with Swift Trading. Now, we're going to take a look at what's going on in the market activity this morning. It may be, if you went to bed last night thinking everything was higher and you got up this morning and you just tuned in, it may be completely different than what it was when we went to bed last night. For one thing, we did have a little overnight export sale to talk about here, and Chris, I want to get your thought on this too. Overnight, USDA said we sold some corn, and it went to Mexico. It was 159,000 tons, and Chris, it was for current marketing year delivery, so they'll take it right away. That's a nice surprise.
It is.
Haven't heard much of corn lately. Do you think they're going to start knocking things loose and start shipping corn now?
I think we'll have to with part of the Ukrainian region out of the exporting business for at least a little while, and we don't really know what percent that is. But yes, I think the corn will become more and more a dominant grain to be exported.
So that could be interesting. We just haven't heard too much in the way of corn sales for quite a while, but it's starting to kind of pick up. I guess better late than never.
Absolutely.
I guess we'll always take that. So let's take a look at our current prices here and see what's going on. And on the corn market here with our quotes provided by Bar Chart this morning, we have the corn, wow, down 19 1/4. Chris, you wouldn't think we had an overnight sale. May at 7.43 1/4 per bushel. December new crop corn all the way down to 6.45 3/4 per bushel. Now that would be down 9.5 cents on the day. So a lot of pressure in the corn led by the nearby contracts. Now, if you look at the soybeans, you have the May contract down 1.5 pennies is all at 16.74 1/2. Now it had a high overnight, about a little over 2 cents away from $17, and now we have come off of that a little bit. Let's take a look at what the new crop November contract is doing here. Currently, it's trading at 14.79, and that's down 12 cents per bushel. That's a significant bite out of that new crop soybean contract. And on the wheat, we have the May contract in Chicago, 30 cents lower. You know, remember the old days, Chris, when that used to be a limit move?
Yes.
We're down 30 cents now at 10.76 1/2. So that's 12 cents away from our earlier low. In the Kansas City market, you currently have May now down 18 cents at 10.71 1/4. However, put an asterisk on that one because it's 20 cents off of its earlier low of the day. And if you take a look at the spring wheat trade, so far this morning, you have the May down 4.5 cents at 10.65 3/4. Spring wheat's a little different, isn't it? I mean, it's not even in the ground yet,
right.
But not so much of a factor going on for some reason there. What do you think about this wheat market here? We have continuing talk about all the drought in the plains. Crops looking kind of dicey out there.
Well, it really is, and we've had a lot of this information earlier, and combined with the aspects of the Ukrainian issues there, the conflicts there, we have bolstered prices up significantly, and now, unfortunately, we're going to get a tremendous amount of back and forth information that will produce hyper volatility, as we're already seeing. So with the main thrust of the move, you know, at least over with for what we know and the amount of information that we have, the next part of it's going to be clearly, I think, just a lot of volatility that we have to weed through until we get planting season here.
How much corn is moving right now? Any idea?
Not a lot. I don't think a lot at all. We're looking at everybody that has corn wants to hang on to it because they can't replenish it at the lower price anymore, and we know that there's great needs, and we also believe that throughout the last probably 5 or 6 months, a lot of the end users have just been going hand to mouth. And so now with the back end of it a little bit cheaper, they might start to look to hedge a little bit of that corn needs going out into the future, and especially coming into planting.
Yeah, you're going to have to watch that bottom line if you're a livestock producer out there right now.
Oh, it's brutal. It is brutal.
Yeah, it's going to be a razor's edge this year. We'll come back in a moment. We'll talk about that livestock market action with Chris Swift right after this. All right, we're back with Chris Swift here, and we're going to take a look at this livestock trade. We'll start with the live cattle board. And so far this morning on the live cattle, you know, we started out with a little bit of a fire under it here, and look at it go, Chris. We have April live cattle up 210 we're at $139.40, and June live cattle gaining $2.40 at $135.35. Now that is at a discount to the neighboring contract months of April and August, but it's showing the biggest gain right now. So what do you think is driving that action in that June contract today?
Positive basis. So you got cash market trading 138, 140 from last week. Futures are down under that, and you get a little break in the corn market this morning, and maybe the aspects of inflation are cooling off just a little bit, that we've seen energy prices come off, and we have to know that everything that we see today is really for priced into the future. So they're assuming that sometime or another, as the energy prices go down, maybe you increase that beef consumption a little bit more from the consumer side.
So you see a lot, if we can bring that table back up again, on the far out deferred contract months, gains are a lot less way out there. Now, explain what the market is trying to tell us if you look at the fall months.
Well, we've already got premium built into them. So they're now trading a negative basis where they're trading over. And I think it is simply that we know that we're probably going to have fewer cattle for the rest of this year to place. We know that the packing capacity has increased significantly. So the likelihood of us having another black swan in the processing aspects of it seems a little bit diminished. So therefore, we put a little bit more premium on the back end, believing that we'll place fewer cattle going forward.
About feeders, look at this. April up 327. We're at 161.25, and the May contract 237 higher at 166.10. Strong gains in the feeder cattle market. Boy, they're really having a heyday with the lower corn today.
A little optimism in the market.
Well, they've waited quite a while.
They did. But still, I mean, look at the premiums that the futures are carrying over it. So there's lots of opportunities for both right now, producers and purveyors of inventory, with the way that the price is structured throughout the future.
All right, let's check out our lean hog trade. Here you go. Everything lower, led by the nearby contracts. April down $1.40 at 101.32. Why? Why is the nearby under pressure like that?
I don't have a clue. I've watched the hog market quite a bit, and I've seen the pork cutouts, and I don't think any of it really justifies what the futures have been doing up and down here lately. So unfortunately, I think the hogs are just caught in a little volatile time frame right now.
But look at that spread there. The April at 101.35, and you go out to, well, good grief, June, 118, $17 spread. And yet the April is dropping even more than what the June is. It just doesn't seem to really fit together. Obviously, something is going on with some unwinding of spreads or something. All right. Well, Chris, thank you for the time today. Always a pleasure.
Absolutely.
And I'm glad you could make it in.
Yes, sir.
And hopefully you didn't wear yourself out walking down the street here. Chris Swift with Swift Trading just down the street here in Nashville. Janet, I'll turn it back to you.